Well, Jeffrey Dennis is our first guest on the show, independent emerging markets commentator and expert. Jeffrey, thank you so much for joining in. Good to have you on. So everyone's looking for some sort of stability in Indian markets and, macros perhaps looking better in the second half. What's your sense? I mean, I don't know if you could hear me, but one of the equity strategists was just pointing out to how a lot of the indicators have come down to a multi-month low. Do you see this changing now that India is talking about a big stimulus, a big cut on the GST side as well, along with the income tax cuts that were announced earlier this year?
I think so, yes. I mean, I think we have to accept that India had a very rough time, especially with the announcement of the 50% tariffs on India. Extraordinary decision, frankly, and done for almost non-economic reasons. In other words, India's significant importing of Russian oil. And I think that led to underperformance by India getting worse. And now we've seen some sort of improvement, I think, in some of the underlying fundamentals. As you've already mentioned, talks with China, GST reform, potentially lower rates there. Also, interest rates could fall further in India. The oil price is helping. So I think after a period of weakness because of the tariff side, I think we are seeing a bit of a recovery now, although a lot of this will clearly depend on where global markets go. And as you've already said, global markets, certainly the US market, is hit a bit of a wall in the last couple of sessions.
Absolutely. Yesterday, Scott Bessent, the U.S. Treasury Secretary, on CNBC in the U.S. actually once again made that same point with regards to India and tariffs and how India was profiteering and enabling the war. Peter Navarro's article in the Financial Times a day before also spoke to that. Jeffrey, is that going to be an important consideration for foreign investors who've been big sellers? I mean, we had somebody from JP Morgan yesterday based out of Singapore who said, well, it's earnings growth which will ultimately decide things for foreigners. And I mean, this sort of stuff, of course, it hurts at the margin. But I mean, these will be sideshows from a slightly longer perspective. Do you agree?
I'm not sure that's right. I mean, obviously, India is a relatively closed economy compared to a number of other economies. It is therefore is vulnerable potentially to high tariffs than other markets are. But this is a swinging level of tariffs that's been imposed on India for, as I say, essentially non-market reasons and not related to the trade balance between India and the US. And I think we have to accept that this is, I think, a significant handicap. At the end of the day, of course, earnings growth is the big driver here. With valuations high in India, like they always are, we need the earnings growth to come through. So the real question is, how do you put those two together? Well, you put them together to argue, is the economy in good shape? And I think the economy is in relatively good shape. And you can see some offset to concerns about the economy from the potential for, as I say, some fiscal easing on the GST front anyway, and also potentially some further interest rate cuts. So I think the tariffs ultimately probably come off, or at least are reduced. But I therefore do see this as a bit of a short-term opportunity here. But it's been a tough period, and I think we can't ignore the 50% tariffs, although obviously at the end of the day, of course, earnings growth is very important.
Hi, Jeffrey. Good to see you. And as always, two quick questions to you. We were quizzing you the last time around whether there is an outside chance of a rate cut, even before September. Now, that's not happened. But now the odds are stacked heavily in favor of a rate cut. So do you think we get two? That's point number one. Point number two is Indian markets. For a variety of issues, we haven't outperformed. In fact, we've underperformed for the last 1 year. Now, going that we have fiscal and monetary stimulus, policy changes in place, and earnings should pick up. Could India at least be a market performer or an outperformer for the coming 12 months?
Well, yes, sure. Two good questions there. On the Fed side, I think it's pretty much guaranteed we're going to get 25 basis points. We'll hear maybe a little bit more about that from Powell on Friday in Jackson Hole, although he may well not open his hand too much because, of course, there is one more employment report and another CPI report and PPI report, to be fair, before the FOMC meeting. But I think we're looking at 25, possibly 50 basis points, and certainly rates are coming down. And I stick by my call, which is that we get 50 basis points of cuts anyway in the second, some point between now and the end of the year. Now, on India, the underperformance has been pretty dramatic, frankly, this year, well into the double digits. India's up around 4% in dollars. EM, well, it's pulled back a bit recently, is up 17% now. So I think you will get outperformance over the near term for the reasons we've discussed, lower oil prices, talks with China, room to cut interest rates. Plus, I think ultimately those tariffs will probably come down from their very difficult 50% level. But I don't think we're going to catch up what China is doing or the markets overall are doing. But I would bet between now and the end of the year, at this very low level, with policy scope for policy easing across the board, really, I think India will be a modest outperformer over the rest of the year.
All right, let's hope so. Jeffrey, great having you with us here. Appreciate your time. Thanks very much for joining us with that perspective.